What's up guys and welcome back to Wall Street Millennial. Recently, there has been an interesting development in the Gamestop Robinhood saga. Elon Musk confronted the CEO of Robinhood, Vlad Tenev, on the exclusive Clubhouse audio app asking him to explain himself for halting GameStop shares last week. The audio of the conversation has been leaked and has gripped the retail investing community. Clubhouse is an invitation-only social media platform that was only launched during the pandemic, but has gained popularity quickly as an exclusive platform. It was launched by a company called Alpha Exploration Co. In May of 2020, the app got a Series A investment around $12 million from the famous venture capital firm Andreessen Horowitz. We've encountered Andreessen Horowitz before on this channel, in particular for their involvement in investments in CryptoKitties. They have a history of making investments in high-growth tech startups and were early investors in Skype, Okta, Facebook, Twitter, and Coinbase. Clubhouse is an exclusive platform that only allowed 600,000 registered users in 2020. It features many different clubs and virtual rooms, where members talk about things like startups, health and wellness, music, the NBA, and other topics. Some of the users of the app are celebrities such as Kevin Hart and Drake. Clubhouse was propelled into the spotlight and its interest skyrocketed a few days ago when Elon Musk and the CEO of Robinhood had a conversation about Robinhood's recent decision to ban all buying in GameStop and other stocks. Elon grilled Robinhood's CEO about what actually happened behind the scenes. Take a listen.
I heard about this Clubhouse, and this has got to be part of the simulation. So I just thought, why not? So here I am. So I'm actually an adherent to the simulation hypothesis.
He knows he's going to be in the hot seat about Robinhood banning trading of GameStop in what many view as an act of market manipulation. He tries to strike a friendly tone and avoid confrontation with Elon by striking a joke about the simulation hypothesis.
Somebody beat us to it, and this is a game.
No, there's a 1 in billions chance that this is based reality.
Oh, okay. What do you think?
Well, I think it's 1 in billions.
Okay.
Unfortunately for Vlad, Musk doesn't fall for any BS and goes straight to asking about the GameStop ban.
All right, well, spill the beans, man. What happened last week? Why'd you stop people? Why couldn't people buy GameStop shares? The people demand an answer, and they want to know the details and the truth.
Yep. Okay, so let me start by giving a little bit of background. So I'm the chief executive of Robinhood. Robinhood's actually
Just go on.
I'll go through this quickly. Don't worry. This is important. It's actually a couple of companies. So there's an introducing broker dealer called Robinhood Financial, and that basically is the app that you know and love. It processes trades. You're a customer of Robinhood Financial. Then there's a clearing broker dealer, Robinhood Securities, that clears and settles the trades. And then we have Robinhood Crypto, which is our crypto business. All of these are kind of different entities that are differently operated. So basically Wednesday of last week, we just had, unprecedented volume, unprecedented load on the system. A lot of these, so-called meme stocks were, going viral on social media, and people were joining Robinhood, and there was a lot of net buy activity on them, as you guys all know. And Robinhood at this time, I think, was number one on the iOS App Store, and pretty close, if not number one, on Google Play as well. So just unprecedented activity.
He talks about how there was unprecedented volume on some of the Wall Street Bets meme stocks and their system could not handle it. This isn't the first time Robinhood had operational issues that impacted its customers. If you remember, on March 9th of 2020, at the height of the pandemic, Robinhood crashed multiple times. There was record volatility as people tried to readjust their portfolios. Robinhood couldn't handle the volume and the app crashed, so people couldn't buy or sell shares. This obviously made customers quite angry, as active trading is most important in times of extreme volatility. But people largely forgave Robinhood. It's reasonable for a rapidly growing platform to experience some growing pains, and they should have no problem investing in new technology to prevent these problems going forward. Therefore, these outages didn't impact Robinhood's brand image, and usage of the app continued to increase throughout the pandemic.
And so Thursday morning, right? So I'm sleeping, but at 3:30 a.m. Pacific, our operations team receives a file from the NSCC, which is the National Securities Clearing Corporation. So basically, as a broker, as a clearing broker, and this is where Robinhood Securities comes in, we have to put up money to the NSCC based on some factors, including things like the volatility of the trading activity, concentration into certain securities, and this is the equities business, so it's based on stock trading and not options trading or anything else. So they gave us a file with the deposit, and the request was around $3 billion, which is, about an order of magnitude more than what it typically is, right? So,
No, why was that so high? Like, this seems like it sounds like this is an unprecedented increase in demand for capital. What formula did they use to calculate that?
well, yeah, and just to give context, Robinhood up until that point has raised, a little bit, around $2 billion in total venture capital up until now. So it's a big number. Like $3 billion is a large number, right? So basically, the details are, we don't have the full details. It's a little bit of an opaque formula, but there's a component called the VAR of it, which is value at risk, and that's based on kind of some fairly quantitative things, although it's not fully transparent. So there are ways to reverse engineer it, but it's not kind of publicly shared. And then there's a special component, which is discretionary. So that kind of acts as a multiplier, and basically
discretionary meaning like it's just their opinion.
Yeah, it's a little bit. I mean, I'm sure there's definitely more than just their opinion, but basically,
well, I mean, I guess like
it's based on growth.
What everyone wants to know is like, did something maybe shady go down here? Like it's like, seems weird that you'd get a sudden $10 billion demand. $3 billion in the morning. Sorry, how much?
Yeah, it was $3 billion US.
$3 billion. Okay, $3 billion
around.
Just suddenly out of nowhere, and
Robinhood routes trades through the National Securities Clearing Corporation, or NSCC, a clearinghouse that confirms trades and manages counterparty risk whenever a stock is transacted between two brokers. Importantly, the NSCC takes 2 days to settle each trade. This is what T+2 means. But when you buy a stock on Robinhood, you obviously get it immediately. Robinhood facilitates this by borrowing the stock from the clearinghouse and giving it to you immediately. 2 days later, the transaction is cleared and Robinhood actually delivers that stock to you. During this 2-day interim period, Robinhood is technically taking on risk by lending you the stock, and they have to provide collateral to the NSCC to prove that they can pay up for any price movement of the stock that happens over the course of that 2-day waiting period. The NSCC uses some opaque value at risk calculation, which relies heavily on their own discretion to determine how much collateral they require from the broker. Usually, this isn't much of a problem because the stock is only expected to move a couple percentage points in the 2 days. Furthermore, there are usually a roughly equal amount of buyers and sellers of a stock on Robinhood, so the positions net out and Robinhood only has a negligible net position that they have to settle with the clearinghouse. But in the case of Gamestop and other Wall Street bet stocks, they have become extremely volatile and there is a huge imbalance as Robinhood users were net buyers of the stock at the time. Based on this heightened volatility, the clearinghouse dramatically increased Robinhood's margin requirement for these stocks up to $3 billion. Vlad claims that Robinhood, along with the other brokers, didn't have the necessary capital, and so they had no choice but to restrict the buying of these stocks. This in part led to the massive 72% intraday drop in GameStop shares on January 28th.
What percentage
I wouldn't impute shadiness to it or anything like that. And actually, the NSCC was reasonable subsequent to this, and they worked with us to actually lower it. So it was unprecedented activity. I don't have the full context about what was going on in the NSCC to make these calculations, but essentially it was a large number.
Is anyone holding you hostage right now?
No,
Blink
I'm okay.
twice.
Yeah. Thanks for asking. But anyway, so this was obviously nerve-wracking, and I actually was asleep at this point. The operations team was fielding this at 3 o'clock, and then we got back, we put our heads together. Our chief operating officer basically said, "Look, let's call up the higher ups at the NSCC and kind of figure out what's going on. Maybe there's some way we can work with them." And basically, there was another call, and they lowered it to something like $1.4 billion from 3.
Okay.
So, okay, we were making some progress, right? And then, but it's still a high number. And then we basically proposed, well, let's explain how we plan to, let's explain how, we'll manage risk in these symbols throughout the day. We proposed marking these volatile stocks that were kind of driving the activity, position closing only. And then at about an hour before market open, so 5:30 or 5 in the morning, they came back and they said, okay, the charge is, or the deposit's $700 million, which we then deposited and paid promptly, and then everything was fine.
Vlad says that he was able to negotiate the margin requirement down to $700 million by promising to only allow selling and not buying. This was a very controversial decision. If they had halted trading altogether, this would have had no net effect on GameStop's share price. But because Robinhood users could only sell, this decreased demand without decreasing supply, and the price dropped as a result.
So that essentially explains why we had to mark these symbols position closing only, and also why we knew this was a bad outcome for customers. Part of what's been really difficult is Robinhood stands for democratizing access to stocks, and
Yes.
we want to give people the access. So that's been very, very challenging. But we had no choice in this case. We had to conform to our regulatory capital requirements, and so the team did what they could to make sure we were available for customers.
Who controls this organization, this clearinghouse?
It's a consortium. It's not quite a government agency. I don't really know the details of all of that.
He says he doesn't really understand the NCSS or who controls it, which is pretty surprising seeing as to he's the CEO of Robinhood and his firm does business with them on a daily basis. Even if what they do is uninteresting in normal times, you would think he should have made an effort to figure out more about them in light of recent controversy.
Okay.
But and to be fair, like we were I think there was legitimate sort of turmoil in the markets. Like these are unprecedented events with these meme stocks, and there was a lot of activity. So there probably is some amount of extra risk in the system that warrants higher requirements. So it's not entirely unreasonable. But we did operational processes to make sure that customers that had positions could sell their open positions, because obviously restricting someone, we got a lot of questions about, okay, you had to restrict buying, why didn't you also restrict selling? And the fact of the matter is, people get really pissed off if they're holding stock and they want to sell it and they can't, right? So I think that's categorically worse. So and lots of other brokers, I think, were in the same situation. Robinhood was in the news, but you sort of heard this industry-wide, right? Other brokers basically restricted the same exact activity.
All right. So it sounds like this organization calls you up and they basically have a gun to your head, either hand over this money or else. And so, because I mean, like basically what people are wondering is like, did you sell your clients down the river, or did you have no choice? And if you had no choice, that's understandable. But then, we got to find out why you had no choice, and who are these people that are saying you have no choice?
Yeah, I think that's fair. We have to comply with these requirements. Financial institutions have requirements. The the formula behind these requirements, I think it would obviously be ideal if there was a little bit more transparency so we could plan better around that. But to be fair, we were able to open and serve our customers, and 24 hours later, our team raised over $1 billion in capital, so that when we did open, when we do open tomorrow morning, we'll be able to kind of relax the stringent position limits that we put on these securities on Friday.
Will there be any limits?
Well, I think there's always going to be some theoretical limit. Like, we don't have infinite capital, right? And on Friday there were limits. So there's always going to have to be some limit. I think the question is, will the limits be high enough to the point where, they won't impact, 99.9+% of customers. So, if someone were to deposit $100 billion and decide to trade in one stock like that, that wouldn't be possible,
It's true that Robinhood did relax some trading restrictions, and as of Monday, customers could buy up to 20 shares, which is an improvement but still quite low.
All right. Well, I guess people really just want to know, if you had no choice, then you had no choice. It's gun to head situation, and then that's understandable. But then whoever put that gun to your head should, be willing to answer to the public.
Yeah, listen, and I know there's processes. This is unprecedented times, and to be fair to those guys, they've been reasonable. So we are. I think the one thing that is maybe not clear to people is Robin is a participant in the financial system, so we have to work with all of these counterparties. So we do get a lot of questions about, why do you work with market makers? Why do you work with clearing houses? Vertically integrating and getting, it's hard enough to build introducing a clearing broker dealer. Not too many people have done that, but the financial system that allows customers to trade shares is sort of a complex web of multiple parties, and it's hard to. Everyone says, oh, it could be better, it could be improved. It's just the necessity of trading equities in the U.S. that you have to do all these things.
To what degree are you beholden to Citadel?
Now Elon drops the main question that everyone has been thinking about. Citadel is a huge hedge fund that bailed out Melvin Capital as they were losing billions of dollars on their short position in GameStop. Being an investor in Melvin, Citadel effectively has, or at least had, a short position in GameStop. This is relevant to Robinhood because Citadel also owns Citadel Securities, a market maker that does business with Robinhood. It is important to realize exactly how Robinhood makes money. They don't charge commissions to the end user, but they have to make money somehow. They do this by selling their order flow to market makers, who sit in between transactions and shave a few pennies off each trade. This is incredibly profitable for the market makers, and they pay Robinhood for the right to do this on Robinhood's trading volume. Robinhood makes a significant portion of their revenue from market makers, and the top market maker they sell to is none other than Citadel Securities. This has led to speculation about a potential conflict of interest. Many have speculated that Citadel Securities used their leverage as Robinhood's largest customer to pressure them into restricting GameStop stock, which benefits their stake in Melvin Capital. Let's see Vlad's response.
Basically, if Citadel's unhappy, then what happens?
Yeah, so that there was a rumor that Citadel or other market makers kind of pressured us into doing this, and now that's just false, right? Market makers execute our trades. They execute trades of every broker dealer. This was a clearinghouse. This was a clearinghouse decision, and it was just based on the capital requirements. So, from our perspective, Citadel and other market makers weren't involved in that.
But wouldn't they have a strong say in who got put in charge of that organization, since it's an industry consortium, not a government consortium, or not a government regulatory agency?
I don't have any reason to believe that. I think that's just like, then you're getting into kind of the conspiracy theories a little bit. So I just have no reason to believe that that's the case, you know?
Okay.
Vlad says Citadel and other market makers had no impact on the decision to halt shares, and it was purely a decision by the clearinghouse, the NSCC. Elon Musk brings up the logical next question of who pulls the strings at NSCC, and if it's possible that Citadel had any involvement there. The NSCC is a relatively opaque organization that most people know very little about. NSCC is owned by the Depository Trust and Clearing Corporation, or DTCC. The DTCC is involved in almost all aspects of financial markets and trading in the US, and is owned by an industry consortium of trading and market data companies. While the exact ownership structure is complicated, they have partnerships which they make public on their website. The partners pay DTCC and get special access and influence over them. Their partners include mainly market data companies and brokerages. Notably, Citadel is not on the list of partners. However, that doesn't mean that there isn't some shady business going on behind the scenes. So what do you guys think? Was the halting of GameStop shares an honest reaction to market volatility? Or was there something more nefarious going on? Let us know what you think in the comments section below. Also, don't forget to like and subscribe to the channel to keep up to date with everything that's happening in the markets. As always, thank you guys so much for watching, and we'll see you in the next one. Wall Street Millennial, signing out.